Welcome back, value investors. In this video, I'm going to be covering Hewlett Packard. This is a well-known company, high quality company that has been around for a long time. This is one of the pioneering companies that built the Silicon Valley, and it's nice to cover this company on my channel. I'm going to go over the financials that they released in the last 2 weeks and update my analysis and valuation for Hewlett Packard. Then I'll go through and make a decision whether I should buy more shares of HP, hold my shares, or sell my shares in this company. Do me a favor and like my video, subscribe to my channel, and please leave a comment on Hewlett Packard. As mentioned, Hewlett Packard's one of the original technology companies up in the Silicon Valley. They've been around for a long time and they've produced many great products. They are now primarily in the PC business and as well as a lot of other devices that consumers use. Overall, the company has a very good brand and has good profitable business, although revenues have been down as of late because there was a big boom in PC sales during the COVID year. Overall, the management team does an excellent job of operating efficiently, and I like the management team, I like the company, and I like the industry. Let me review the highlights to their earnings that they released less than 2 weeks ago. Revenue's down, and that's expected. During the COVID year, PC sales were really high, and the comparisons are pretty tough. Earnings were better, earnings per share, than they previously guided. So that was good news. Free cash flow is also very good for the company. Very good news because I use free cash flow to value the company. They returned $1.1 billion in the form of share buybacks and dividends. Very good. And they retired a lot of debt. So all good things of a disciplined company. And I'm glad that HP, although they're not growing, they continue to be profitable and they really keep their balance sheet in good condition. The downward revenue trend may be over. If you look at the trend in revenue, you could see that quarter over quarter, you're seeing growth in revenue in the Americas. EMEA is beginning to pick up. For one quarter, you saw positive sales. Asia Pacific, you're seeing a pickup of revenue. And the United States, a pickup of revenue. So hopefully that's a sign that revenue may grow a little bit going forward. And if that's the case, 2024 should be really good for Hewlett Packard. Looking at cash flow and comparing how much cash they produced in the previous fiscal year compared to the current fiscal year. For the full year, you could see a drop from one year to the next. And that's expected. In fiscal year 2022, they were still experiencing that boom in PC sales with people having the extra money from the stimulus money, the incentive to buy a new PC because everybody was social distanced and wanted to get on Zoom calls and do all kinds of things at home. So that's expected and understood. What's really encouraging is in the quarter, you see the quarter is pretty stable. In fact, you see that fourth quarter, the overall cash from operations increase if you compare it to the fourth quarter of the previous fiscal year. And free cash also increased if you compare the most previous quarter to the same quarter in fiscal year 2022. So that's very good news. Hewlett Packard provided guidance, and based on the guidance, the company is going to be doing better in the next quarter as well as in the next full year. And the reason I say that is the numbers are higher than where they actually performed in the most recent quarter, as well as the full year, the full fiscal year 2023. From a free cash flow perspective, another sign that the business is improving because it's higher cash flow is what they're guiding towards than they produced in fiscal year 2023. I believe Hewlett Packard is discounted by 22%. And I get there by valuing the company based on free cash flows that the company is going to produce in the future and discounting the earnings per share as a second method of what's the company is going to produce. Let's go over free cash flows first. So I'm going with the number that they produced in fiscal year 2023 as a starting point. And I'm going to grow those cash flows conservatively at 2% for the first 4 years. Everything beyond year 4, I'm going to grow again at 2%. And everything beyond year 4 is included in the terminal value. I'm going to discount all those free cash flows I expect in the future by 9% to get to a net present value of all those free cash flows in today's value, net present value of $42.3 billion. I'm going to add the cash and take away debt to get to an equity value of what remains and is the value of the company based on the free cash flow method. The market cap of the company is $28.5 billion. The current per share value of Hewlett Packard is $36.49 based on free cash flows, but the stock market will sell you shares at $28.86. So based on free cash flow it provides a discount of 26%. The earnings per share I expect the company to produce in the next 4 quarters is $3.42. It was right in the middle of the guidance that they produced, by the way. And if I discount, well, first, if I use a PE of 12, I grow those earnings per share by 3%, and I discount all those earnings per share that I'm going to receive in the future, I get to a stock value of $32.53. Stock market will sell you shares at $28.86. So there's a discount of 13% using the earnings per share value. If I combine the two, and I'm going to put more weight, I'm going to use 2/3 of the weight of the free cash flow method, 1/3 of the earnings per share method. I get a 22% discount on Hewlett Packard stock. Looking at where the stock has been priced over the last year, you could see that it was doing quite well in the July-August timeframe, but then it had a big drop. And I believe they had a very bad earnings report back then, but they've really recovered more recently. And I think they have a fairly optimistic 2024. So I think there's really good room for the stock to run up additionally. And it's certainly going in the right direction. Year to date, the stock is up 9.9% and it pays a 3.75% dividend. It's not keeping up with the S&P 500, but it is a very good stock and it's a very good dividend paying stock to have. So let me decide whether I want to buy more shares of HP, just hold my shares, or sell my shares in HP. What do I think of the company? I think I want to be a part owner in the business, and I do like the industry, and I think the management team is doing a really good job. The balance sheet is in very good condition, and there is a discount available on this high quality dividend paying stock. So I'll be a buyer of shares of Hewlett Packard. Thank you for watching the video. I hope you found it interesting. Please leave a comment on Hewlett Packard. Let me know what you think of the company. Do me another favor and like my video and subscribe to my channel. Thanks again for watching.